We Filipinos still have a long way to go when it comes to investing for the future. We seem to prioritize instant gratification, but I think how to invest properly is something that we all need to be familiar with.
It's simple, really. You work today, you invest, then leave better tomorrow.
Besides, investing shouldn't be scary, you know. It doesn't have to be overwhelming. I mean, I started when I was a teen. I hope that I inspire my kids that when they're old enough, they'll tell me that they're excited to do the same.
What's important is to find a good reason to invest. It becomes so much easier when you visualize your goal.
People think I travel so much and I have a YOLO or you only live once attitude. But the truth is, I travel because that's my business and I make sure I invest in it, spend time for it to give people the best experiences they deserve.
When people find out that they invest for what I'm passionate about, they always say, "What?" But I always just tell them that I can afford to fund my passions because of my investments.
The thing is, some people are just too shy to ask for financial advice. Like asking for help is seen as a sign of weakness, when in fact, it's through asking that we learn the best way of doing things, even in investing. With ATRAM, you can engage and be confident that you have a partner in achieving your financial goals.
People usually think investing means buying a house or retiring. Sure, it can, but saving for smaller goals is another way to do it.
People think investing is expensive. Nowadays, even with a small amount of money, you can already begin your investment with ATRAM. It's easy to make it a monthly or even a weekly routine. ATRAM makes investing simple, even for busy moms like me.
And even if you're always on the go, like me, you can keep an eye on your investments online. Plus, I'm confident that ATRAM, my trusted partner, will take care of my portfolio and make sure it gets invested in the right place.
Never settle for average. Why? Because life is what we make it. And a strong investment partner can help us live the life we want.
ATRAM is dedicated to delivering an investment experience that helps people get more out of life. In fact, it was built with that single focus, to help clients attain their investment objectives. We see Filipinos invest in their dreams and aspirations. With ATRAM, building the future is a task we can surely take on.
With ATRAM,
You
Can take on tomorrow.
Hello and good morning, everyone. Thank you for joining this week's episode of ATRAM's webinar series. Today will be more of a learning session as we take you through the ins and outs of investing. I am Paolo Edilior, Business Development Manager at ATRAM. If you are in the early stages of managing your portfolio, then this is perfect for you. If you are a novice or somewhat advanced already, now's the time to brush up on those skills. This might sound cliche, but practice makes progress. You will be having polls in between the presentation, so better be attentive. Additionally, I'd like to let you know that this webinar will be recorded and that copies will be disseminated within the day as well as posted on all our social media pages. Make sure to stay until the end as we will be wrapping up with a quick feedback form. ATRAM has always been a proponent of financial wellness and education. In fact, we are the first fund manager to introduce investing for as little as 50 pesos or $1 through GCash. This is precisely the reason why we are conducting this exercise so that we'll be able to equip you with the right tools and mindset to support your journey in accomplishing your financial objectives. Our speaker for today is a chartered financial analyst, charter holder. Yes, we do have a lot of them in our arsenal. He is a product manager from our ATRAM Funds team. Now let me pass on the mic to DJ De Jesus.
Good morning, everyone. It's a great Thursday morning, and I'm excited to be speaking to you today. Here in ATRAM, we have an advocacy to get everyone in the Philippines to start investing. In my experience, I still get similar questions when I talk about our products. To help address those questions, in this webinar, we will be looking at investing basics, but at the same time, busting those myths about investing. In this side, Here are the 3 of many investing myths that I normally encounter and will help dispel. There are many more myths, but I think these 3 are very useful to debunk to help you in your investment journey. Hopefully, after this session, I can convince you to start investing to help you build your future. Because here at ATRAM, your future or present. Let's talk about the first myth, and one that is common as we grow up. I can always start investing when I am older. Ipon-ipon muna, tapos pag nakaipon na, pwede na mag-invest. Which ties to another myth, which is I need a lot of money to start investing. We'll have a survey right now. What age do you plan to start investing? (20 to 30 years old, 31 to 40 years old, 41 to 50 years old, or I am already investing? There's no right or wrong answer here. I'm getting a sense of the interest of the audience. Okay, a good number of you are already investing. So I hope that this will be a great refresher for you. Okay. So to help dispel the myth, we need to look at the end goal of investing. Why do we need to invest? For most of us, it really is for retirement. Para pag mag-retire, relax na lang. Sakto ba ang ipon ko para di na ako magtrabaho? To see how much we get during retirement, let's look at the pension you can get from SSS. Next slide. So this is the SSS table. It determines your pension and other details surrounding the SSS. Next slide. If your income is above 20,000 per month and you work for 30 years, you earn a maximum of 16,300 pesos monthly. Next slide. Is 16,300 pesos enough for you? Please click raise hand if you think that the amount is enough. So I am starting to see a couple of raise hands, but 16,300 pesos enough for you? I don't see a majority of doing it. And I think this is because it really isn't enough. Ubos na yan for groceries, kuryente, at gamot pa lang. Next slide. The common trap when you think about saving or investing is what we save, whatever is left after our expenses. Gastos muna, tapos kung meron pa, ipon. Next slide. What we should be doing is to treat investment as an additional expense to secure your future. By setting aside money for investment before you have money for expenses, it forces you to live within your means. Especially for millennials and Gen Xers, we like to travel and have our experiences. But we need to ask, are we setting aside enough for our retirement? But TJ, you might be asking, so bakit mas maaga dapat? Next slide. Let me introduce to you the power of compounding. Assuming your investment earns you an average of 8% per year and you save 50,000 pesos per year, if you were 25 when you started, it would gain you about 14 million pesos. But if you started at 35, it would only grow to near 6 million pesos. How does it grow that big? Because you're earning from your earnings. Like in Filipino, kumikita ang kita mo. So what's the secret? The secret is time. The more time you have to invest, the more money you are able to invest, and the more growth you are able to achieve. So the truth is, we should start investing now. The sooner, the better. Next slide. So, okay. Next slide. We have established that we need to start investing, right? But the most conventional route people take is to deposit their money in the bank. Your money will accumulate any interest the bank gives. The deposit is insured up to 500,000 pesos by the PDIC, and your chance of loss is only if the bank goes bankrupt. On paper, sounds good, right? But the biggest problem you face is that your money today is not worth the same in the future because the price of goods goes up through time. As the economy grows, so does demand and so does prices. The increase in the price of goods is called inflation. Maybe in 2010, the amount of groceries you buy was worth 1,000 pesos. But now in 2020, that same basket of groceries would be approximately 1,219 pesos. Assuming we have the same rate of inflation, 10 years from now, that same grocery basket would be 1,486 pesos. Therefore, you would need more money in the future to still buy the same goods you consume today. Next slide. The PSP, our central bank, is mandated by the government to control inflation. For 2020 to 2022, they target an inflation rate of 3%, plus minus 1%. So the target range is between 2 to 4%. In the past few years, they targeted the same rate of inflation. The goal is to let our money grow more than that. But if you are using a savings account, your money is only growing about 1/4% or 0.25%. If you went for a 1-year time deposit last year, it would have only earned you about 0.80%. So if you put your money in a bank, the money grows less than inflation. Yung totoo, parang lumiliit pa yung pera mo. Next slide. Pero kung sa stocks or bonds ka naglagay ng pera, mas tutubo pa yan. Ang investment, parang negosyo yan. Mas mataas ang tubo niyan kaysa kung iniwan mo lang sa bangko. Through investing, you make your money work for you. Next slide. In the past 10 years, Philippine stocks grew on average by 12.4% per year. For Philippine bonds, it grew by 6.2% on average per year. Both numbers beat inflation, and that is the power of investing. Next slide. So again, you want to invest now, not only to add to your pension benefits, but also so that you can shield yourself from inflation. Ganda pala mag-invest, no? But you must be saying that it's too good to be true. Okay, let's have a survey right now. Aside from savings or time deposits, what have you invested or planned to invest in? There. So the survey has popped up. Stocks, bonds, property, funds, or others. Please provide your response now. Great. A number of you want to invest in stocks, and that's perfect. Stocks is the perfect vehicle to fight inflation. But we need to temper ourselves and understand how these work. And that leads to our next myth. Investments can guarantee a rate of return. Next slide, please. There. It is normal for some salesperson to quote you a rate of return. Numbers catch our attention. I have been using numbers since the start of my presentation. Kaya huwag magpaloko. Every investment, even safe ones, can lead you to lose money. Next slide. So let's talk again about time deposits. Apart from losing money to inflation, there are other ways you can lose money from time deposits. Worst case scenario, the bank goes bankrupt and anything above 500,000 pesos is gone. But let's talk about something we normally forget. The need to pre-terminate before the deposit matures. In short, kailangan mo na ng pera. If you need to withdraw early, you will be charged with pre-termination fees. So the rate of return you were promised, you need to deduct the pre-termination charge from that. Next slide. Another popular investment that seems to have guaranteed returns are bonds. You get a yield, you're paid regular coupons, and you hold it to maturity. Worst case scenario, the company that issued the bonds goes bankrupt. Even reputable companies can fail. Noong 90s, nangyari ang Asian financial crisis. Maraming negosyo noon ang nalugi. But there is another way to lose money through bonds. And again, it's when you need the money. When you need to sell the bond in the market, the value of the bond you bought might be lower than the price that you bought it at. Next slide. Another popular outlet is the VUL. VULs are like funds, but in fact, they are insurance. Parang 3-in-1 coffee. May investment ka na, may insurance ka pa. But the difference between VULs and funds that are for VULs, you won't get your money back if the insured event does not happen. Plus, coverage still depends on your underlying investment, for which they charge actuarial and commission fees for. The truth is, the investment pays for your insurance. And since it is insurance first, investment second, the potential gain from it is smaller too, and the risks are still the same. So even with the safest investments, it always comes with uncertainty. This is a very important point. Next slide. The general rule of thumb is that the higher the return potential, the higher the risk. If you are quoted a return, remember that the chance for loss is bigger. As you go up in return, you also go up in risk. Time deposits are the safest, but can only get you so much, and you lose to inflation. Bonds are next, followed by stocks, and the highest are what you call alternative assets, such as property, precious metals, grain, and etc. Remember this trade-off. The higher the return promise, the higher the risk. Next slide. Given that investments have risks, you have to understand how one can earn from these investments. The most visible side, and the one people focus on the most, is when the investment pays us regular income. If you invest in property, pwede mo ipaupa yung property mo. And the regular rent would be a regular income stream. For time deposits or bonds, they will normally pay you interest. Some pay annually, most pay semi-annually, and others will pay you quarterly. They will quote you a yield, but remember that yield is what you would get only if you hold that bond to maturity. Lastly, stocks can also pay you income in the form of dividends. This is the company's way of giving back to its investors a part of its earnings. Kumbaga, kumikita yung kumpanya, kumikita ka rin. But for bonds and stocks, these are also traded in the market. Di ba sa palengke, may presyo ang isda, karne, gulay. Stocks and bonds also have a marketplace, which is called an exchange. And everyone there can buy or sell investments. In fact, if you want to get higher returns from stocks and bonds, you would need to consider the potential increase in the value of your investment. Pero paano ba tumataas at bumababa ang presyo ng investments ko? Next slide. For that, we need to know what these investments represent. For stocks, these represent partial ownership in the companies you invest in. Basically, pag may stocks ka, may-ari ka rin ng kumpanya na yan. Next naman, pag bumili ka pala ng stocks, pwede ka maging may-ari ng SM, Ayala, Jollibee. So kung ikaw ang nagmamay-ari, ano ba gusto mo para sa negosyo mo? Kumita, di ba? Next slide. So the value of stocks rise when you see that the company is going to be profitable. Ang galing, may say ka pala kung gusto mo ginagawa ng isang kumpanya o hindi. Next slide. And to drive the point on uncertainty, let's take a look at historical returns of stocks and what we can expect moving forward. Philippine stocks, as represented by the Philippine Stock Exchange Index, had its best year in the last decade in 2010, up above 40%. The worst year in the last decade is below 11%. The bright side is on average, stocks gave you 12%. Moving forward, we can't expect much growth as compared to before. Remember, growth will have to slow down. So you can expect an average annual return in the next decade of around 10%. And given the uncertainty, you can expect to lose up to 22% or gain up to 41%. Next slide. Now let's talk about bonds. Bonds are a bit more straightforward when it comes to interest because you're lending to the one who issued the bonds. Kumbaga, madali intindihin kasi utang lang siya. Pero natanong nyo ba, bakit ganun yung interest na binabayad ng gobyerno o ng mga kumpanya? Next slide. The interest rate is made of two components when you're lending to the government. A part is the real growth of the economy. As in economics class, real growth is when you remove inflation. And the second component is inflation. So interest is an approximation of how the Philippine economy can grow. And because the growth of the economy changes, so does the interest rate. Next slide. For bonds, when interest rates rise, you have to know that the price will go down. And if interest rates fall, bond prices go up. But why the reverse relationship? Because as people, we concentrate on the interest rate. If we think that the growth of the economy is going down, then you know that the interest rate should go down. Because more people would want that higher rate, which is currently being available in the market, there will be more demand for that bond. More demand, the price will have to go up. And when the price goes up, the interest rate will fall as a consequence. Next slide. So to summarize, bond values go up when the economy is going down or inflation is going down. But you might be asking, utang ng gobyerno to, no? Kung pumapangit yung ekonomiya, edi hindi makakabayad yung gobyerno, di ba? But you have to remember, the government can always print money. So the government can always pay for the debt, just like the Lannisters. But you must also be asking, what about corporate bonds? Well, apart from the interest rate being influenced by growth of the economy, the rate has an added compensation for the ability of the company to pay. The likely the company could not pay, the higher what you call a credit spread. Kumbaga, mas di kaya magbayad, mas mataas ang interest. So corporate bonds gain if people think that the ability to pay improves. Next slide. On the return side, the worst year in the past decade was in 2018, where bonds fell 4%. The best year was last year, where bonds reached 19%. Wow. Now we don't expect that 19% repeating anytime soon. On average, we expect bonds to return around 5% in the next 10 years. Factoring uncertainty, this means that you can lose 8% in a year or gain maximum 18% in a year. Next slide. To summarize, if you want to earn more from your investments, you need to consider the value of your investment, whether that investment will grow or not. For stocks, you want earnings to grow. For bonds, you want the interest rate to fall. And you saw how much you stand to lose if you cannot predict what will happen to the economy. So the tip here is, instead of trying to time the market, be patient and diversify. The market moves quickly and usually very abruptly. Diversification allows you to not think about the abrupt movements and focus on your life. Bonds and stocks also generally move opposite from each other. Stocks are good mostly in a good economy. Bonds are good mostly on a down economy. There are times that both stocks and bonds could be down, like when inflation becomes uncontrollable or if there is a crisis. It is also helpful to add alternatives to your basket. You could also invest in things like gold, property, as these will provide more instances for the returns to offset. For example, gold is normally up when times are really bad. So when they're both down, gold could possibly be up. A good rule of thumb is to use your age in allocating to bonds. If you are 30 years old, you could have 70% in stocks, 30% in bonds. If you are 40 years old, you can have 60% in stocks, 40% in bonds. This is because when you are younger, you have more time to work and be riskier. But the older you get, the less risk you are allowed to take. And if you are looking at alternatives, you can invest around 5 to 10% in that as well. A smaller allocation is proper for alternatives because these tend to be higher risk assets. More than investing just locally, adding global investments will also help you diversify your portfolio. Plus, there are investments that you cannot access locally, like investment in technology. Next slide. Last tip to combat uncertainty is to always monitor your portfolio. Monthly is a healthy place to start because we get our salaries monthly. And following the investment first, expense later, every payday is the best time to add. And since you will be adding during this time, it is also the best time to monitor your portfolio. This is the time when you can evaluate if your investment is something you still believe in, or maybe you have new things that you believe will happen. If an investment that you hold is already high in demand, it might be the best time to take profit on your investment and find other investment opportunities. If an investment opportunity has gone down in price, that might be a good time to add or to buy that investment. Also, very importantly, adjust when your life changes. Take into consideration big changes in your life. Did you get promoted? Did you get laid off? Married? Do you have a new child? Enrolling your kid to school? Graduating? Suffered a loss in your family? Won the lottery? And for that last one, invest that right away. Huwag lang igastos kaagad. Your goals should change depending on your needs, and so your investment should follow. So in summary, investment comes with uncertainty, and your best shield against this uncertainty is diversification and regularly monitoring your investment.
Thanks, DJ, for that. Can I just insert a few questions? And I get these questions a lot from friends who, like you and me, have day jobs. What if
Sure.
you're not familiar with the market? You don't have the time, or you don't understand companies well enough to start investing? What's the solution for that?
Well, you could leave it to the professionals, and you could leave it with us. With ATRAM, we make investing easy. Next slide. If you don't have time to see what's going on with companies or the economy, we can manage the money for you. We at ATRAM will actively manage your portfolio to find the best opportunities out there. We manage our portfolios with a medium to long-term investment horizon in mind, which is perfect for you to reap the benefits of compounding. Leave your money there, and we do the rest. We study the companies and the economy to drive our decisions so you don't have to. And we have a risk management culture, ensuring that we really aim for you to not lose as much money. Next slide. We have the widest range of products and services that you can invest in. You can invest in our products for as low as 1,000 pesos only. Gone are the days you needed to invest about 20,000 pesos for a single stock. I mean, you still can, but you only need 1,000 pesos for a fund that invests into multiple stocks. For more information, please visit our website, www.atram.com.ph. Please stay tuned as we will brief you on how to invest into these products. Next slide. And if you like this webcast, we have had and will continue to have multiple webcasts. We are the only fund manager that does this weekly. Our social media has replays of these webinars if you need to go back to them. We have invited Joel Consing and TJ Limcauco to help you understand companies like ICTSI and Ayala. We have had market outlooks to help you understand the economy. We have also featured some funds in our past webinars. And today, we are talking about investing and hope to give you more educational content if you like this one. Next slide. Lastly, here at ATRAM, we have made it easier for you to open an investment account. You can easily do that through our online platform, Seedbox. Seedbox will help you determine what your risk tolerance is and help you tie your investments to your investment goals. I hope I have convinced you to invest and help you dispel some myths of investing. If you have any questions, please reserve them for later and I will come back to entertain your questions. For now, I will turn over the floor to Che, our Client Services Officer, to teach you how to access our investment products. Thank you.
Thank you, DJ, and good morning to all. To open an account with ATRAM, first, just visit our website, www.atram.com.ph if you need to learn more about the funds. Second, if you have more questions about the funds, visit our site FAQs or ATRAM Academy's page. Lastly, it will guide you to our online investment platform, Seedbox. As mentioned by DJ, you only need a minimum of 1,000 to start investing in the ATRAM's peso-denominated funds. Thank you.
Thanks, Che. DJ, I think we can go now to the most exciting part of our presentation, which are the questions coming from the audience. You mind answering some of them? All right. So I have a question here, just in case a company defaults or goes bankrupt, which will be priority to be paid stockholders, debt credit holders or bond holders?
Well, the priority will always be debt. Stockholders will always be last when it comes to a bankrupt situation. That's why when companies go bankrupt, you'll normally see stocks go down. And you'll normally see possible compensation when it comes to bonds. So you might not lose the total amount that for bonds, but for stocks, you would have to absorb most of the loss.
I see. I have another question here, which is better, VUL insurance or get separate mutual fund and life insurance policy?
As I mentioned before, if you go for a VUL, the VUL, the insurance, will be paying, your investment will be paying for your insurance. So VULs are so popular right now that the commission fees are actually higher for VULs as compared to investment products and life insurance. So as an investment company, the suggestion would be you go for an investment and you go for life insurance separately.
I see. Now, another question from one of our Gcash subscribers. I have a Gcash ATRAM investment. What will happen to my investment should Gcash crash or close down? Can I directly deal with ATRAM?
For Gcash, if Gcash crashes, please wait patiently. Gcash will be able to entertain your needs, but be patient. We understand where you're coming from. This is through our partner, and we want to give our partner a chance. Thank you.
Okay, interesting question here. How does tax work in investments?
Well, tax works. There's basically a final withholding tax. It's called an expanded final withholding tax. It's about 20% on your interest, and I think 10% on the dividends. I'm iffy about that right now, but yeah, that's basically the tax that is on your investment. When you invest into funds, that is already inherent to the fund, so it's already also being charged to you.
Yes, and DJ, I know you tackled this again, but I want to put it out. When is the best time to invest?
Now. The sooner the better, of course, because you have to think about how much time you have to invest. The more time you have to invest, the more time it has to grow.
Right. And what are the types of investments that give you moderate income and gains without assuming much risk?
Well, if you want moderate income and gains, the best answer would be bonds. Especially if you buy the bonds and you leave it to maturity. But at the same time, bonds have the risk of credit default. So the companies could go bankrupt and you wouldn't be able to recover most of your investment. So in that case, to shield you, again, I would say that the best thing to do when you're a moderate investor is to diversify. Invest in both stocks and bonds. And in ATRAM, we have a couple of multi-asset funds and balanced funds that you could invest in.
All right. Do you have global investments? You short the market, coming from an audience member.
I do have global investments. I don't short the market. And the reason for why I don't short the market is shorting is more speculative. And I feel that we should be long-term investors, because the market really is volatile. You could be wrong and lose so much when you short the market.
All right. Okay, so I think we can leave it there for this webinar. Thank you, DJ and Che, and to our audience as well. If you have any further questions or would like to learn more about ATRAM's funds and strategies, please get in touch with your relevant ATRAM relationship manager or visit our new website, www.atram.com.ph. Lastly, please answer the survey at the end of this session, as your feedback is valuable to us. We appreciate you taking the time to join us, and on behalf of ATRAM, I would like to wish for the safety of you and your family. Best of luck. Thank you very much and have a great day.